Today, crypto prices stabilize after last week's inflation data. The founders of bankrupt crypto hedge fund Three Arrows Capital could reportedly get served subpoenas via Twitter. And Mastercard is making it easier for banks to offer crypto services to customers. Welcome to CNBC's Crypto World. I'm Kate Rooney. Digital currencies on the rise to kick off this week. By noon Eastern, Bitcoin traded around $19,500. Ether, meanwhile, crossed above $1,300, and Cardano jumped to about 37 cents. Prices are holding steady after that hotter-than-expected inflation data released last Thursday, which initially sent prices for both crypto and stocks tumbling. Yuya Hasegawa, a crypto analyst over at Japanese exchange BitBank, tells CNBC that inflation data wasn't enough to cause a panic in crypto markets, and he says that if Bitcoin crosses back above 20K, it could test that $23,000 level next week. Okay, let's catch you up on the top stories. First, the liquidators handling the bankruptcy of crypto hedge fund Three Arrows Capital want to force those founders to cooperate using subpoenas served via Twitter. Bloomberg reports that liquidators from advisory firm Teneo are asking a federal judge to allow Kyle Davies and Su Zhu to be served via their Twitter accounts and email addresses. Lawyers say that the usual means of serving subpoenas have failed so far because the whereabouts of these founders are unknown. They also claim Davies and Zhu failed to provide requested information like crypto account credentials, and that the pair have only spoken to liquidators a handful of times. Next up, a major state regulator is investigating crypto exchange FTX. According to a court filing, the Texas State Securities Board is looking into whether FTX offers unregistered securities through its yield-bearing accounts. The agency's director of enforcement made those allegations in a filing to the same bankruptcy court overseeing Voyager Digital. Reminder, Voyager is selling its assets to FTX's parent company after a contentious, drawn-out bidding process. FTX had looked to buy the crypto lender after it filed for bankruptcy this summer, which Voyager initially rejected and called a lowball bid dressed up as a white knight offer. FTX eventually got the winning bid in a bankruptcy auction. Voyager is set to sell its assets to FTX for about $1 billion. In a statement, an FTX spokesperson saying, quote, "We have been in talks with the Texas state regulator for a while. We have an active application for a license, which has been pending, and we believe we are operating fully within the bounds of what we can do in the interim. We look forward to continue to work with regulators in Texas. In parallel, we are working exceptionally hard to ensure Voyager customers get the best possible outcome, which we believe will happen if our bid to give assets back to users is approved by the Voyager bankruptcy court. We remain hopeful that all state regulators are working towards this same goal of getting assets back to users." Last up, Mastercard wants to make it easier for financial institutions to offer crypto trading to clients. The payments giant announced it's teaming up with Paxos and will act as a bridge for institutions to access Paxos's blockchain infrastructure. Mastercard also says that the program will handle regulatory compliance and security, which are two of the big reasons banks have avoided crypto services in the first place. So for our main story of the day, I spoke to Jorn Lambert, Mastercard's chief digital officer, about why the company is launching this new offering. Take a listen. So walk us through the significance of this crypto source, you're calling it. What does this mean for Mastercard, and how should we think about the significance of this news?
No, look, Mastercard, everybody knows, is all about bringing transaction services to lots and lots of people. It's about access. It's about security. It's about peace of mind as consumers use their transaction services. And over the past couple of years, we've actually brought some of these services to the crypto space as well, introduced crypto cards whereby people can use their card to spend their crypto assets, use their cards to actually buy crypto services or buy crypto assets, buy NFTs with their cards, etc. And so we've started to actually bridge the world of crypto and the world of fiat currency over the past couple of years. And quite a few consumers have taken advantage of this. But what we've also discovered in our 2022 payment index survey is that there's a lot of consumers out there that are really interested in this, interested in and intrigued by crypto, but would feel a lot more confident if those services were offered by their financial institutions. Actually, about 60% of the consumer says, gee, if my financial institution would offer me the ability to buy crypto assets, to buy NFTs, I would much rather do that because it's a little scary to some people still. And therefore, we're seeing lots and lots of financial institutions that are looking to actually say, oh, how can I serve these consumers? How can I make sure they come to me? They don't have to go to somebody else. And we thought, well, that's actually a great place to offer services to those financial institutions so they can service their consumers. It's very much, Kate, like the beginning of e-trading. You had these specialized firms that offered, internet trading, and after a while, the financial institutions felt like actually we can do that too, and consumers generally feel actually confident to use the services of their trusted banks.
And when you say financial institutions, you're saying really banks? Is that really the target audience here?
Yes, correct. The banks, the people who service consumers today with their transaction services and banking services. And so where does crypto source come in, right? So we have worked with a licensed and regulated custody provider, Paxos, and more will follow, in order to package a service with obviously the crypto custody for the buy, sell, hold, but wrap in there also the Mastercard security services like CipherTrace, which provides transaction verification, transaction monitoring, like Ekata, which provides identity monitoring. Offer also our bridge to fiat and crypto with crypto cards, with cash out through Send, with the ability to wrap in loyalty, so that those financial institutions can truly offer again, licensed and regulated service to their consumers with the fiat crypto bridge in a very comprehensive, secure, peace of mind access to those consumers.
How will this work? So if I'm the bank here, do I basically just plug in on the back end to the Mastercard option and then allow my consumers the same way that I would on the front end on maybe their banking app to be able to log in and buy or sell all cryptocurrencies, just Bitcoin? I wonder if you could give us more of a description of kind of the real world use and what it might actually look like.
Yeah, but that's exactly right. So the bank says, gee, I would like to offer this to my consumers. They would call up Mastercard. Mastercard will provide an API, a bundled API with all these services behind it that the bank can integrate in their app or in their e-commerce or e-banking services. And as a result, the consumer will be able to buy, sell, hold those cryptocurrencies the way they today probably do with the Mastercard stock. We will start with a number of currencies out there. We won't offer 30,000 currencies. That we will determine that based on demand and based on the comfort that we have with that. But the idea is really to offer access to these kind of services to tens of millions, if not hundreds of millions or billions of consumers out there that today haven't made the leap yet have an interest in that.
Really interesting. And you talked about some of the fear factor from consumers of the risk out there and security. Are you taking on more risk by offering this? And does it put Mastercard in a position of more liability if something were to go wrong in any sort of crypto trade?
The key here is obviously there is a risk in the underlying assets, meaning these are volatile assets, and so consumers will need to be comfortable in trading in those services and holding those assets. The way today they get comfortable with different level of investment vehicles, right? That is really a consumer decision, and we will not obviously get involved in that. We facilitate it, but it's a consumer decision. What we do, however, is making sure that as the bank is offering these services, this is in keeping with the regulation and with the licensing that is required. And as you know, it's a very complex regulatory environment whereby it is not always easy in all geographies to be on the right side of the regulation, and then making sure as well that all the compliance tasks are being performed in the process. No bank, frankly, wants to be on the shadowy end of that, and we will make sure with our partners to bring this in the most secure fashion to the banks.
Talk about that experience dealing with regulation in all these different markets. How difficult was that to launch a product like this when you are dealing with very much a global asset that the rules look pretty different if you're in the US, Canada, Mexico, anywhere in the world? How did you figure that out, and how are you going to navigate that going forward as some of the rules probably change in the next couple of years?
Yeah, so we are figuring it out. We haven't figured it out in the sense that regulations are very different geography by geography, and so that product won't be available everywhere at the same time in the same way. We will need to adapt to what is allowed in certain geographies. We will be able to offer a narrower or broader service, but what we will ensure is that whatever we offer is a fully licensed and a fully regulated activity, and we will not dabble into any gray zone, because that would expose the banks, that would expose the consumers ultimately. And so you will see us move coverage as regulation expands. And in general, we believe that regulation is an ally here. It's not a problem. It's actually leads to consumer protection, leads to a safer place. And so we embrace and work with regulators to get this right.
Is that the biggest thing you had heard from banks? The idea that the regulation was too difficult to deal with, the liability was too much, and therefore they didn't want to offer it? And I wonder about the demand from customers and your conversations with the banks really ahead of launching something like this.
Banks are looking for help and advice, and they're looking for partners to work with them. I think we've had a long history of working with banks on advice on developing new products, and so it's a quite natural thing for banks to do, to look at us as like, well, can you help us here? And given that we are and have been working in the crypto space for a while, know a lot of the players there, have many partnerships, we actually put one and one together and says, well, we can offer both the advice as well as the service. So it's but you're right, there is discomfort here, both with the regulatory environment, but also with the type of activity. And so with that advice and with that partnership, we can offer what consumers ultimately want.
Okay, that's all for Crypto World today, but we'll be back again tomorrow with a lot more. We'll see you then.